the price is the most important thing. Even in an upward moving market, the market does not go in a straight line. There's a stair step that it follows. There's always going to be a pullback that may provide a better entry opportunity for you.
Talking a little bit about Fomo. The stock market has been soaring. We've been talking about that all show here today. And there's a lot of people that still aren't in that want to get in, but they just don't really know how to get started. They don't have a plan. They don't have rules, but they're just not comfortable. And what are some of the things that you're doing right now to help people gain more confidence and more comfort into these financial markets?
Well, the number one thing is helping them understand how the markets work. And that's one of the reasons to come into one of these classes that Josh has been talking about. I want to invite you to come in and let us kind of introduce you to our core strategy. It's a foundational strategy that really does probably the most important thing that you can do with any trade or any investment, and that's to help identify the proper price. So let me ask you guys that are listening right now, because there's a lot of new people, a lot of people that have never invested before that have jumped into a market that is on fire. And it's pretty hard to lose in a market that's on fire. But let me ask you, how did you decide what price you were going to enter a trade at? And why did you get in at a particular time? Was it just because the market just kept going up and you didn't want to miss out? Because the price is the most important thing. Even in an upward moving market, the market does not go in a straight line. There's a stair step that it follows. There's always going to be a pullback that may provide a better entry opportunity for you. Why is the proper price so important? Because that's how you will identify a quality quality risk management position. If you're using a stop loss, the proper entry will determine the quality of that stop loss. What about your target? How do you identify when you want to get out of a trade or an investment? Well, there's a way of doing that with a high degree of accuracy. Most people just guess at it. To be honest with you, most people stay in too long and let part of their profit be taken away from you. But the core strategy that we have is really based on something that is factual, something that is reliable and repeatable. A lot of the things that are happening out there now that have provided some opportunities are kind of a one-off thing. It may be due to a particular news story. That may not be something that is repeatable, but there is something that is, and that's the relationship between buyers and sellers based on institutional activity, based on the price or the buying and the selling of Wall Street firms, hedge funds, big investors like Warren Buffett or George Soros. They have enough financial clout to move the price of something. And the one thing that can't be argued against that is factual is the relationship between supply and demand, or in the financial markets, buyers and sellers. If there are more buyers for an asset, the price will go up. If there's more sellers, price will go down. The key then is to be able to identify where those buy orders are and where the sell orders are, the institutional buy orders, institutional sell orders that are going to change or move the price. That's what core strategy does. It's designed to identify them, and we can do it based on the way institutions have to trade. And we'll be more than happy to go into more detail on that and show you how it works in these classes.
You're right. I mean, that proper price is that number one thing. And as Al was talking about, most people trade and invest every other Friday. That's when it gets put into retirement accounts or whatever that may be, payday, right? But you do need a core strategy to identify that imbalance in buyers and sellers. If there's more buyers than sellers, price will go up. More sellers than buyers, price will go down. That's the mechanics of anything we buy and sell in life as well. Think of it as an auctioneer. If they're trying to sell, I have a cup of coffee here. If I'm trying to sell this cup of coffee, I'm going to say, okay, I'm going to sell this for $4. How many people are going to buy it? Well, probably a lot, because everybody knows coffee costs about $6 at a coffee shop. Then I'm going to say, okay, I'm going to raise the price a little bit. I'm going to do $5. There's a couple less buyers until there is only one buyer for my one seller. Once I get to a price where it's too high, price will come down, and then naturally that will happen. So, Al, when people are looking to get a plan started, what are some of those steps that people need to take? Because you've helped a lot of people here at Online Trading Academy get started, especially if they're brand new, because most people are only investing in their retirements, but they want to do more. What's some of the first couple steps that you can do?
Well, a plan is really important. We think that's probably the most important thing, the most important component you can put together if you're going to trade or invest. Think about it. Almost every profession, a professional has a plan that they follow. A pilot has a flight plan. Surgeon has a plan for surgery. They don't just walk into an OR and then just decide what they want to do to someone laying on the table. They know exactly what they're going to do.
Yep.
And in trading and investing, you need to do the same thing. And the best thing to do with a plan, first of all, is to look at the end point. Where do you want to be? What do you want your life to look like in 5 years or 10 years or whatever the time period is? You have to really identify that to be able to identify the proper assets, the proper way of trading and investing to get from where you are now to where that end point is. And then that plan should include a foundational strategy. For our students, it's the core strategy, which is a timing mechanism that helps you identify when to get in, when to get out. And by the way, you have to be able to identify with a high degree of accuracy where the institutions are going to buy and where they're going to sell before they do it. Because once they've done it, once they have entered a position, then the movement, a good part of the movement has already taken place. So what our core strategy does is help you identify where their unfilled orders are that are going to end up being filled. Then that plan should include the proper assets for you to trade, and then a way of risk management. A risk management strategy is key. You should never trade anything, especially leverage assets, unless you look at risk management first. Always identify that first. Then the reward really is the secondary part of it. If you can control the risk, then that part comes easy.
Well, I mean, all that is found on a price chart as well, right?
Correct.
Most people trade and invest based off of they do a lot of research on, we'll say a stock. Most people trade stocks. They do research. They try to find earnings reports, company numbers, the management team right. doing well, and us as people, it's hard to analyze that because we just don't know what to analyze. So that's why having a strategy that's a visual strategy, us as adults, we are visual learners. That's where we learn to identify where those institutions are buying, where they are selling, that imbalance in price. But that's all based on a price chart. And Al talks about that price chart in these investing classes about as far as what that is. It's candlesticks and it's price movement within a certain amount of time. So, and I mean, think of it this way too. About having a plan. I mean, Al kind of hit the nail on the head there. I mean, I used to be in excavating. We didn't just go out there and start digging a hole. We had a plan or a blueprint, and we followed that plan. There's different elevations, and here's why. And once we followed that plan, it all came together. And most people just don't really have a trading and investment plan. So I'm glad you talk a little bit more about that here today because it helps people understand, okay, if I want to do this, where do I get started? How do I start? What are some of those steps? And can I do this? I mean, anybody can get into the financial markets. The access is all online. But you have to do that properly. You have to do it with confidence. So, Al, it's getting close to the end of the show. And we have a lot of listeners that, some people have been listening to the show for many years and just haven't decided to take action. I was actually talking to someone today, and they've been listening for a couple of years, and they've been putting it off. Well, is it smart to put off your financial future? Because eventually, what's that one thing that we cannot get back?
Time.
It's time. Al, we had a rainy week here this past, it's been a while. Let's brighten it up again.
Well, what you're going to find as a trader or investor is that there are many things happening that you can't control. And when you can't control what's happening, just challenge yourself to learn how to control the way you respond to what's happening, because that's really where your power lies. That's where you have the opportunity to achieve success. That's where that lies. The education is available. With proper education, you combine that with ongoing support and mentoring. You go from assuming you can't be successful to having the confidence to know that you have the opportunity to be.
And that's the key, too, is be accountable for what you want to do with your future. Don't think of it as, 5-10 years down the road. Think of it as, okay, what am I going to do within 2 to 5 years? Take some action and get started. Same time, same place next week, as always, here on WCCO. Retire young, my friends.